Welcome back to the channel, Crypto Trend Trader with a quick update on Bitcoin. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. It is 2:56 a.m. Eastern Standard Time, and we are getting ready to have our 4-hour close in about 3 minutes here. And we are at an absolutely pivotal point in time right now. Bitcoin has been following essentially. First off, we started with this 2-point trend line right here in orange, and then we finally hit a third touch right here, and then we actually broke away from it and came down and found support at a higher level. And I'm looking at this point right here, this point right here. This is essentially a false breakdown from it, a fake out, or like a saved like bear push that the bulls took back over, took us back up almost to 50,000, and then we came down and found our 1, 2, third support on that trend line right there on the 4-hour. And then after that we found actually a fifth support right here, but then we broke down from it, tried to get back above it, and could not get back above it. And what we were doing is each time we were breaking out of a descending triangle or descending channel, breakout, descending channel, breakout, and then this one was almost like a sideways triangle. And then instead of breaking to the downside here, we were able to break out one final third time. And then I have two basically resistance lines in place here at the top, both in red. One is the closes on the 4-hour time frame, and the other is the wicks. And depending which one you're looking at, we've basically been getting rejected from the same area repeatedly. So this was our first rejection here, our second rejection right here, third rejection right here, and now look here, we're getting a fourth rejection right now in 1 minute on the 4-hour. Now, does this mean we can't just have saved this blue trend line right here and continue to move to the upside the same way we did back here, where we initially lost that yellow trend line and then saved it and came back up and saved the yellow trend line and kept moving up? Not at all. We could definitely keep doing that. But the way it looks right now that's really alarming me or making me pay special attention to it is we have a lower high right here, then a slightly higher high, then we have a slightly higher high again, and now here we have a slightly higher high for the fourth time. So that's 1, 2, 3, 4 highs in a row, slightly higher each time, and we finally just touched our fib level, which is the 1.618 at 50,000, which is essentially like our fib extension target, which is a huge target for us. It's also a very even and round number. And the thing that makes me really think 50,000 could be a key level here is in the previous bull market in 2017 going into 2018, we topped out at 20,000 almost exactly on the dot. And that's like a key level psychologically, but then also it was a fib level as well. And it was the 1.618, which is key right now, and also 50,000 is a psychological level. And then here, if we look at the TJD TDMACD, which is available for free on TradingView if you haven't checked it out previously, we have for that first high right here, this is our second high, this is our third high, and then this is potentially our fourth high. And everyone that's followed this indicator for some time knows one of two things is going to happen right now. We're either going to break back above this and maintain this blue line on the slope for the TJD TDMACD slope line, or we're going to get rejected, and this is going to be a fake out breakdown, which is the strongest type of rejection and typically has the strongest moves to the downside or upside in the opposite circumstance. So if we look at this indicator and then we switch down here to the Jewel Thief as well, we have again a high, a second high, a third high, and now look, we've just gotten a slightly higher high this time. But if this was to all of a sudden start selling off violently, this would actually get dragged down and we would have potentially 4 lower highs as well. So the potential right now is that we've either saved this level and we're going to move to the upside right now, or we've printed 4 corresponding levels of bearish divergence. And the bearish divergence is a divergence between price action and our oscillator or indicator here. So here we have a high that took a lot of energy to get to, which is right here. And then we have another high that's slightly higher but took just a little less energy, and then a third high that's slightly higher but took a little less energy, and now a fourth high that's slightly higher but took a little less energy on one oscillator but could potentially be breaking out from it. So what I would expect here is either a strong breakout to the upside, which would be the measure move of this triangle pattern essentially that we've been oscillating inside of, or a breakdown powerfully from this level as well. So either one of those can happen right now, but judging by like the bearish divergence that's been taking place, it's starting to look more likely that we're actually going to get the breakdown. Now if we get the breakout above to the upside here, that's going to take us up to 54,723. But if we got our breakdown essentially from the level we're at right now, that's going to take us down to 43,900, so about 44,000. So essentially what we're looking at is either a breakout to like 55,000 or a breakdown to 44,000. So we're talking about $11,000 difference in price action depending on which direction it breaks in. Now is it possible that if we break down we would find support at the key fib level here at 1.236 or that orange slope line? Of course that's a possibility, but since we've already broken down once and found support at the 1.236 and then rallied back up above it, if we break down from this area now, I would expect it to blow right through this and then retest that previous level, which would be that 42,000 level, which was where we got that initial top out in price action all the way back here, which would be basically a retest of our support, resistance rather. We break through it and then come back down and retest it as support, and then we could get continuation. That would be an SR flip, or obviously we could just continue on from this level and get, the bearish divergence doesn't play out and we move back to the upside. So to tell you the truth, we are in a strong, powerful trending uptrend. So typically I would give the favor to the bulls here. But seeing this 4 times bearish divergence play out, and then we're at, basically losing strength on the oscillator below the slope, it's flipped back over blue. That basically tells us this thing is going sideways and it's only just been able to save the price action. We also have declining levels of volume throughout this entire range, which again typically results in a powerful move in one direction or the other. Now again, typically this is going to break to the upside. Bitcoin really likes these ascending triangle breaks to the upside, and we are in a powerful bull market, but I'm just very skeptical here that that's what's going to happen at a key Fibonacci level, key Fibonacci extension, key targets in both directions. But the psychological level at 50,000, we have been potentially chipping away at it multiple times here, attempting to break above it. But I'm just really starting to think that there's a possibility that this thing is going to break to the downside. So I'm paying close attention to it. I'm not getting overly bearish just yet, but I'm starting to see some serious signs here to be skeptical of this price action. And you'll see once again, as we look at this, we basically came down to the 21, saved price action, came down to the 21, saved price action, came down and broke below the 21 right here, saved it, and then again, what's going to happen next? If we break down from this and we come down to touch the next, moving averages are going to be either the 50 simple or the 55 exponential. So we'd be looking at basically like a 47,000 to like 45.8 range, somewhere around there. But because we've already tested that level once on that previous breakdown, I think there's a higher likelihood that we would actually come down to that first level support right here and come back and retest this level, which was putting us at that 43,700 range. And if that happens, I think the likelihood of us coming down to that 42,000 range and really just retesting, our previous basically like breakout point to see if we can find support is going to be a pivotal level in these markets. So again, I don't want to get overly bearish right here, but we're seeing a lot of weakness in the altcoins right now. A lot of them are basically just barely hanging on, and they've already had the cross between the 8 and 21 to the downside. So of course, if Bitcoin just starts bursting to the upside, I would expect the altcoins to rally like in its wake as well. But I think that honestly, like money is consolidating out of the altcoins, and that's why they're showing weakness, and then it's going back into Bitcoin. We've also seen like a few percent rise in the Bitcoin dominance as the market cap essentially stays the same, which basically tells me that the money is flowing out of the altcoins and back into Bitcoin. So that's probably corresponding with the overall weakness in Bitcoin, but its ability to continue floating up while the altcoins make lower highs and continue to float down. So again, this is just a short little update. I just wanted to fill you guys in. We'll do our regular video in the morning tomorrow, and we'll see how this plays out. Hopefully by then this will have shown a powerful breakout to the upside. This is also such a tightening range right now that you could easily put in, or I could easily put in, or have put in, potential trades in both directions. because you can have essentially a very tight stop loss at this point in time with high risk reward ratio. So if we were going to say, for instance, take the trade to the upside, we're looking at essentially like, you know, a 10% or more move to the upside actually. And if we were going to break down to the downside, you know, again, we're looking at over a 10% move to the downside. So even with like a 3.25 stop loss in place, like 3.25% stop loss in place, you're still looking at over a 3-to-1 risk reward ratio. And then the likelihood of this trend actually continuing on in that direction past our target actually, in my opinion, has an extremely high likelihood. So if we sell off and break down from this level, I think we're very likely to get more than the measured move and continue to sell down to like at least that 42,000 range, which is essentially like a 13 to 15% move. In the same way that if we break out to the upside above 50,000, I think that we're much more likely to hit one of our higher level targets rather than just get the measured move. We might get the initial measured move up to like 55,000, 56,000, but I think we would consolidate and then continue on to the upside. So again, I like these types of areas where we have like a very tightening range like this, because typically when we get the break, it's very powerful after a consolidation like this, and it usually gets quite a bit of follow through as well. You can set a smaller stop loss but have an overall like higher risk reward ratio, so you have to risk a lot less to find out if you're right or wrong. And you can essentially buy spot and then also enter a short position and have a stop loss in place on both. So in the event that you essentially get, you know, you're wrong in one direction or the other, and we have more than that 3 or 4 or 5% move, you know, say we get a 12, 13, 15% move, you can essentially like guarantee yourself at least a 2, 3, even 5-to-1 risk reward ratio in either direction without even having to manage your trade actively. So again, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. But I just wanted to do like a quick update like video in real time on a situation like this, because you don't always get these types of situations playing out in real time and have the opportunity to discuss them ahead of time, you know, as opposed to like putting out like a trade afterwards and saying, oh, this is why I did it, this is why I took it, this is why it worked, etc. In this case, I get to come to you guys in advance, tell you what my bias is and why I'm biased in that direction, but say that essentially I can safely take the trade in both directions. And regardless, you know, the only way that a trade like this cannot work out is if we get a powerful like move in one direction and then it's a fake out in the opposite direction, or a powerful move up and then it's a fake out and we go to the downside. So it is potential we could get a throw over and a powerful move to the downside. It's potential we could get another breakdown like this and then a powerful move to the upside, or that was already what happened and now we broke down, faked out, and we're going to come up and continue on, or that we could just like all of a sudden, you know, flow over like a waterfall and just start dumping. So you know, there it is. Just wanted to do a quick update on Bitcoin, talking about the basically like Bitcoin dominance as well as the overall crypto market cap, and what I'm seeing when I see this weakness in altcoins. Also when I see like, you know, essentially bearish divergence taking place multiple times on a 4-hour, and after getting like such like, I mean, these were very choreographed moves right here, you know, very clear areas where we broke down from a trend line and it looked like we were going to lose support and then it broke to the upside powerfully. Like, you know, a lot of times this will happen in distribution, or essentially it will happen as someone like a whale steps in and sees this as a key buying opportunity. So, you know, again, this definitely gives us a lot of opportunities for trades in either direction, especially after seeing like that breakdown from Bitcoin earlier where it sold off about 8%. And the alts all dumped basically across the board like 20 to 30%. I just feel like there's a lot of skepticism, tight stop losses, over leveraged traders in the market right now. I can't remember what the exact number was, but I want to say it was something ridiculous, like a couple $100 billion in liquidated longs just on that sell-off earlier. So, you know, that might be exaggeration, but I feel like I heard something like that. So, you know, definitely a point where, you know, there's been so much strength to the upside for so long of a time that basically margin funding rates go through the roof, and it just makes sense to push the price in the opposite direction to clear out some of those longs and kind of reset the funding rate, because otherwise it gets too expensive to use leverage in that direction. So even if we are going to continue moving to the upside, it makes sense to reset some of those funding rates by liquidating the longs and then having a powerful move back to the upside and making everyone re-enter and using that rocket fuel to break us to the upside. Or once again, that was a legitimate breakdown from our breakout right here, liquidated quite a few longs, and then that's essentially just like market makers using the strength in the market to sell back into it one more time. So, you could say that happened here once, twice, 3, 4, and this is the 5th time that they've used a push up to essentially sell into the market. So, and again, I'm not trying to be overly skeptical on this thing. It's still powerfully in an uptrend right now, and there's no reason to get overly bearish on the market. But I'm just telling you what I'm seeing right here and the potential that we could be like losing this 8 moving average, coming down here at least to retest that parabolic SAR. And again, that parabolic SAR lines up perfectly at like 43,000 with our previous top, and that would take us back down to test our 21 moving average on the daily, which is right there at 42,300, which is the exact top where we topped out previously. So, we showed quite a bit of weakness on our previous daily candle, and now obviously this one is still active for the next 15 hours and 45 minutes. So while we're showing strength here currently, there's no reason that this can't start selling off, flip red, and then start coming back down to test the slope line on the daily. And then once again, we are at extremely high elevated positions. We are in the bullish control zone, but essentially what I like to look for when we're having like a temporary top out is an extremely powerful knife stab up into the bullish control zone, and then the cross, hard sell, and then leaving that bullish control zone. So, it's still a little early to tell right now, but that's the exact signature that we basically got coming into this topping area right here before we got like that 20+% market move from 42,000 back down to like 30,000, which eventually came down to closer to like 29, 28,000. So essentially we could get that sell off easily right here back down to 42,000, find support and continue to the upside. We could easily find support here and continue moving up, or we could come back down here and break down and get a powerful topping area, even come down here back again as low as 28,000 and then put in essentially like a powerful neckline area right here, and then see, can we get support come all the way back up, or are we going to come back up and then find weakness again, potentially put in like a Adam and Eve shoulder like distribution over time, an ascending broadening wedge. There's plenty of possibilities that can happen right now, but it's important that you look at the possibilities ahead of time and sort of get a game plan as to what you're going to do and what you're expecting ahead of time. That way you can be prepared for these markets and they don't catch you off guard. So we'll see how it plays out. Once again, I don't want to get overly bearish right now, but I'm just telling you like what I'm seeing on the charts right now, and based on my experience, what I'm potentially expecting to happen here. So well, there you have it, guys. Just a quick update. I'm Crypto Trend Trader, and I'm out of here. Oh, and by the way, make sure that you remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Peace.